What's up, guys? This is Borrow, aka Investment Mentor. Thanks for your time and watching today. Today is July 2nd. It's another Friday, and thanks to God again, it's Friday. So we're gonna have a party. We're gonna do a lot of shit. The weekend, right? So hopefully you will have a great weekend ahead. And in today's live stream, we're gonna talk about very biggest events going on in Wall Street and probably the entire financial world as well. We're going to talk about the Didi IPO, which just took place 2 days ago on Wednesday. Many of you might have like no idea what Didi so far. What's Didi? What is Didi? Didi is not like a Didi or Mei in Chinese, or like your brother or sister in English, okay? Didi has become the biggest ride-hailing company in the world. If you have no idea, if you have not been aware of that yet. Didi is the China version of Uber, but much bigger than Uber though, with much more tech innovation and breakthrough, as well as the backing from many industrial giants in China National Development Plan and Policy. So we're going to check into some detail about it and how I'm gonna trade it and invest on that, and what we're gonna do. I mean, how I and my team gonna do like in the future for that. Okay, so before everything, okay, I'm not a financial advisor. This is not a financial advice, and so this is the channel. The video is totally for entertaining, for educational purpose. Okay, so do your investment research and analysis before every trading and investment of your own. Okay, and just be responsible for your own, okay? When you make some money, come to me, okay? Just say thanks. But if you're losing some money, just forget about me, please. Okay, so let's do it. So today, let's have some music first, okay? Otherwise, really, right? Sorry. Sound like a paranormal activity. No, because my boss is having fun with the girl outside and he's already drunk, and I mean, whenever my boss is drunk and having fun with the girl, he always just try to like be annoying on me, Well, everything's okay right now, other than my boss. Okay, so my boss keeps saying, so I'm like the way I speak. That's why we just want to be our own boss. Okay, boss, can you stop like talking shit to me? Okay, boss. Are you satisfied right now? Are you comfortable? Are you comfortable? You keep saying I'm like a like Didi or Gra or like in the fucking room or shit. Sorry guys. It's we are kind of like time here that I have some microphone issue. Alright, just don't give a shit, okay? So if you are anyone from the US market, you cannot listen to me clearly, okay? Or just call me right away and we can discuss all of it. Because we have very important things to talk about today's live stream, okay? Where were we? Okay. So I was going to talk about like Didi IPO, right? Didi IPO. Oh. And then I was saying, like, I mean, today we're going to talk about Didi IPO and some of the related company and their stocks. Also, why it is so important and how it will continue to be very, very important for your stock trading and investment in the future. Because the time is always limited for my live stream, so I will post some interesting and insightful links in the description box down below this video to help you afterwards. So please check into that when you have time, okay? So, okay, my boss is like crying and dancing outside and keep like talking shit, but ignore that shit. I would let's get into a video to see what's comparison between the top ride hailing company of like Didi and Uber. Okay, let's do that. Um,
Heard of Didi? If not, you should have.
It's big, it's bigger than Uber.
When the ride-hailing giant went public on June 30th, it was the biggest US IPO for a Chinese company in 7 years. So, how does Didi measure against fellow industry heavyweight Uber? Let's compare. Unsurprisingly, Didi's main ride-hailing business is in China, but it has a presence in 15 countries, including Japan, Australia, Russia, South Africa, and across South America. Uber, on the other hand, offers rides in 70 countries and gets most of its revenue from the US and Canada. Uber may have a further reach in terms of geography, but as of 2020, it only has 5 million drivers worldwide, versus Didi's whopping 15 million. Most Uber drivers take their own cars to work, but a lot of Didi drivers rent through fleet management partnerships with car makers including Toyota and Nissan. Alongside ride-hailing, both companies have taken bites out of the food delivery market too. Uber is technically worth more, with a market capitalization of $95 billion versus Didi's $67 billion. From 2018 through 2020, Didi was loss-making, but in the first quarter of this year, the company turned that around with a $30 million profit. Uber keeps on losing money, but has promised investors to be profitable on an adjusted EBITDA basis by the end of the year. From investors' perspectives, Didi holds an inherent risk.
I think investors are a little worried about regulatory crackdowns that China is putting on its companies and on this company in particular regarding anti-competitive practices and how it compensates its drivers.
The two have different tacks when it comes to self-driving tech. Didi is working on an autonomous technology with car maker GAC. Uber, however, sold its self-driving unit in December to startup Aurora. Instead, it set its sights on building bespoke ride-hailing models, teaming up with the British electric van and bus maker Arrival, with models due to go into production in 2023.
Okay. So this is a very short briefing according to Reuters, okay? So now you can tell the difference between what's going on for Didi and what's going on for Uber, right? So now you know Didi is not just a Didi, it's just not your brother or sister. It's fucking the largest ride-hailing company in the world, just outbeating Uber. Come on. So
Hey everyone, good morning. All right, well we have about 30 minutes to the bell. Haven't taken any trades yet, but
sorry about the transit, which the screen and the voice. We're trying to improve that for the short video and live stream. Okay, please leave your comments. Definitely, are you? Azure. That. Let's talk more. Okay. So I was gonna say, why and how is Didi important for your trading and investment, right? Didi, China version of Uber, had its IPO in New York Stock Exchange this Wednesday, and it's mostly expected Chinese linked IPO in Wall Street after Alibaba IPO in 2015, which is like 6-7 years ago. The IPO price for Didi is about at $14, which is considered a decent price by most of Wall Street analysts, and a lot of investors just say, oh, it's way undervalued. It's way undervalued. And the price move up and down between 14 and 18 in the past 2 days. I mean, it's the same. It's about like a 15.27 so far after the IPO, which is not so much volatile so far. The market cap is about 80 billion for Didi, listed in New York Stock Exchange. But pay attention, like Alibaba and Tencent, some tech giants, some like a Chinese tech giants, real market cap could be potentially 5 to 10 times after they later on go back to Hong Kong or Shanghai to get listed in Hong Kong Exchange or Shanghai Exchange. That's the thing. You can check to see what's the market cap for Alibaba in like listed in Nasdaq, and what's the market cap of Alibaba listed in Hong Kong Exchange. It's totally different. It's about like 5 to 10 times different. So it's the biggest. All right, so okay, once again, Didi is the biggest ride-hailing company in the world, over Uber for manifold in terms of market share, business growth, and the powerful shareholders. Its business growing and market expansion outlook is extremely fucking promising and important, making it to be added in many of the global indices. That's the thing. You need to take a look. Okay, as you can see, like China Didi to be added to S&P Dow Jones indices on July, and China Didi to be added to FTSE equity indices. There are like 3 indices adding Didi as well. Okay, so what does it mean? It means this like Didi is going to be on the trend, like to be really important for the future of the global economy and the financial system. Okay, that's the thing. So it's been extending. I mean, Didi has been extending business reach and coverage from simply a ride-hailing company into an auto vehicle and electric vehicle charging development manufacturing now, with huge supports from many tech giants and industrial giants and China national development plans. The major shareholders include tech giants like Alibaba, Tencent, SoftBank, Uber, and more, a strong backing to make it promising the long term as a long-term play. Let's also look at the historical price chart of these tech giant in a minute to make sure they're brilliant giant instead of idiot giant. Okay, so let's take a look. All right, so this is the price chart for Didi. So we can see it just had an IPO at around $14, and just I searched 18 at the very beginning of the IPO day, and that's because of the momentum from those institutional investors, and most of retail investors just cannot catch on that. And then after that, it's very normal for a lot of IPOs. You just had a pullback, but it always depends on how hard the pullback is. And but for Didi, it just like fluctuate between like $14 and $18. So the volatility is okay. It's totally fine. And yesterday, my team just like got in for like $1 million when the price just like pulled back down below like $15. So it was about like more than 10% of the turn today. But that's for short-term trading. We'll talk more about that. I mean, Didi is definitely a target, like a steady can be considered for your steady strategy for your investment as well as trading. Okay. So what we're saying, like the major investors for Didi is like Alibaba. So what's going on for Alibaba? Alibaba is one of the biggest like corporation, like Chinese linked corporation. Okay, so that's the like a historical chart for Alibaba. From it just had an IPO in 2014 until this year. Obviously the trend is like just upward trending. Okay, so this is definitely because it's a huge capital companies and with a very strong background profile and business outlook. So it's definitely something you can take as your for your steady strategy for your trading investment. And if I were you, I would have like $1 million. If I have 2 million or 3 million, I will have like 1 million for short term trading and 1 to 2 million for me to long term investment, something like that. And I mean, I will just go to like more details for Alibaba here. So if if you are like short term like trader for Alibaba, obviously if you can see the support and resistance and support here, obviously, I mean there has been a like crackdown to Alibaba and Ant Group since last year, and it just had a pullback all the way from like 320 all the way to about 217 right now. But obviously, it's approaching the support level. So I mean, I'm like for my like short term trading position, I'm gonna adding some more, right? Because it's getting closer to the support, and we're gonna bet like once it go like break down below the support, we just stop loss. But he had like a higher chance to rebound all the way to previous resistance. So that's room for you to take profit. Okay, so But the thing I mentioned Alibaba was about Alibaba is one of the major investor shareholders of Didi. And it's also one of the biggest like tech giant in China. So you can look at the chart. Is it just an idiot or is it a brilliant company? The wise, brilliant investors, or and what kind of like resource support, all the things they have. So major investors, so what they can do. Thing. And then another is Tencent. Right? Go ahead. About China. I think a lot of us have not Communist Party of it. But this is Tencent stock chart. Okay, Tencent, they have WeChat and all the shit. And they just had an IPO in 2005. And then we can see like about like 2013, the stock price went crazy all the way from the $1 at the very beginning all the way to like 775 few months ago. Okay, so obviously it's an upward trending well. So this is why. Because that's already the biggest social media site and kind of like internet company in China. Trades are unavoidable. And so Tencent is one of the Didi. That's the thing. And but if you want to go more detail, if you want to trade like Tencent, we will talk about more. I just draw like some lines here for like Tencent in terms of like long-term investment. And I also think that Tencent is a target. I mean, it's also good to buy as long as you set your like support like stop loss level like 559, something like that. And then upside like a profit taking potential is also like much so many times. So stop loss. Okay, so that's the thing. And then so what was okay, so after that, what's going on? The SoftBank is like one of the biggest and smartest and most intelligent company from Japan. They do a lot of investment, holding a lot of company share like all over the world. And we can see, okay, SoftBank is not kidding either. The trend for SoftBank is upward all the way along. So Tencent, Alibaba, and SoftBank, they're not fucking idiot. They're like brilliant investors with like a power, with like a tech innovation, like guts, with all the shit to to support and be the shareholder of Didi. That's the thing I was going to talk about. Okay, so let's come back to the Didi chart. So I was gonna say, like, so how I'm going for Didi with my trading and investment. Okay, with all the basic information about Didi's profile above, it's definitely a great target for stock trading and investment going forward. And obviously, by the market capitalization size, the business model, and the market outlook, Didi can be considered in your steady strategy. Can be considered in your steady strategy for the three major type of strategy in stock trading investment, which are the conservative, the steady, and the aggressive. Okay, so Didi, like Tesla, like Neo, like Alibaba, they're definitely considered the steady one. So personally, I'm allocating 1 million for Didi short-term trading right now, and plan to put in another 1 to 2 million as for the mid to long term investment for the next 2 to 3 years to see what's going on for the next. Okay. So, but it's interesting to mention that my crazy insane prop trading team just like shooting a capital of like couple million for Didi to like pick out like Didi when the prices I pulled back to about like $14 yesterday. So yeah, it's a pullback a little bit today because of the cybersecurity issue, the news that pop out. But that's the thing. I mean, as you can see, I mean in the video, in a lot of like news and the reports on social media stuff, they say Didi, like I think like probably like 70 to 80% of the investors are agreeing or supporting Didi, while a little bit of investors are kind of against of it. And that's the thing, like no one can like everyone, right? So in the short term, like the volatility will still be there. So that would be a chance for us to use a certain amount of money to do short-term trading to take some profit from the short-term trading. But DD is definitely a long-term play, so better for us to have a amount of capital to kind of like chipping to buy the dips like over and over again along the way for the long-term investment. Okay, so next, let's see if we have some. Yeah, okay. Ouch. Yeah, you don't need to. We just consider where is the money that we can make. Okay, like money is never biased. Money is never discriminate. I mean, would you do that? Oh, my mic is right. Yeah, but China is definitely one of the investing opportunities, one of the target for us. The volatility and the growing potential, like who cares, man? Like, oh, come on. Like, I'm not a communist guy, but like, ah, I think like you're not a communist guy either, but we just want to make some money. I mean, of course, like when there are a lot of opportunity in the US market for us to take, of course we're gonna take that. But whenever there's any opportunity like merge or pop off from China market, are you gonna sit there and do nothing? Come on, man. All right, so we still have something to keep like going on, so we will pay some attention to that a little later. So, all right, I mean, to this point, I think it's very important to let's also take a look. Let's also take a look to see how Jim Cramer, Jim Cramer, Jim Cramer and investors from Wall Street think of DD, okay? Let's take a look on that.
We've got some real financial horror stories out of China, although admittedly they pale in comparison to the human rights horror stories. You got cases of blatant fraud like a Luckin Coffee. That people braided me from that one for spotting that. And that came public in 2019. The stock tripled from its IPO price before we found out that Luckin was faking a big chunk of its sales, and the shares imploded. Within 13 months of coming public, the stock got delisted from the NASDAQ. You've got shady companies with disclosure issues like Phoenix Tree Holdings. That's a Chinese real estate company that raised over $100 million in January of last year. The stock steadily worked its way lower, and a few months ago, it got delisted from the New York Stock Exchange for failing to, quote, make timely, adequate, and accurate disclosures of information to its shareholders and the investing public, end quote. Or how about RLX Technology? Now, this is a vaping play that's been the largest Chinese IPO of 2021, the largest. So what happened here? RLX surged from $12 to $35 in its first couple days of trading. But since then, the stock has plunged to the single digits as the Communist Party has started cracking down on vaping. Well, they were smart to get that done, huh? Now, the company's being sued by investors for allegedly overstating its financials and misrepresenting the risks when it came public. However, that doesn't mean you should give up on every single Chinese IPO. While a lot of them are indeed low quality, there's a big caveat. The larger ones, ooh, they tend to be much, much better than the smaller ones. Doesn't make them a sure thing, but it means they're sometimes worth buying on a case-by-case basis, which brings me to the one I want you in on. Didi, D-I-D-I. That's the Chinese version of Uber that's coming public on Wednesday. This company has a stranglehold on China. It's the ride-sharing market. They own it. They crushed their competitors and then bought them up when they got tired of losing money. That includes Uber China. Didi's also got some really huge backers. Chinese tech giants like Alibaba and Tencent, a Japanese conglomerate like SoftBank, even Apple is in Didi. Finally, based on the proposed price range, which values Didi at around $65 billion, I think the valuation seems eminently reasonable. Now, there are some antitrust concerns here, but as long as they stay on the Communist Party's good side, and I know it's probably hard to do, but as long as they do, I doubt they'll have much trouble with regulators. So if you want to speculate on a Chinese IPO, you've got my blessing to bet on Didi. I would try to get as many shares as you can. D-I-D-I.
Okay, so you have seen that, like that's what like Jim Cramer talk about Didi. So obviously, like, Jim Cramer is like fucking crazy, desperate to lick on the D right now. Once again, Jim Cramer is fucking crazy, desperate to lick on the D right now. So what's your thought? What's your thought? Like leave your comment and thoughts down below. And other than this, we gonna, I mean, although but the thing like is, I want to like mention a little bit as well, because we don't want to do anything bad, okay? Like a lot of like Chinese IPO, and like in Jim Cramer's video, he also say that like about like 1/3 of those like Chinese IPOs are like fucked up, and so we always have to be paying attention. I mean, we have to like check into the like the capital, the market capitalization size, and the business profile, and what's the shareholders, and all that and but like for Didi, as mentioned over and over again, not only by me, by a lot of the analysts, by a lot of financial advisors, by a lot of like news media, saying like probably like 70-80% of all those experts are saying Didi is a fucking the shot in the streets. And you know, what do you think? I mean, of course, if you have $1 million want to invest, you don't want to throw like all the million for Didi all of a sudden at like certain price on. You can like divide that 1 million into half and half, and do like a little bit short-term trading, a little bit long-term investment, and then if you want to, for the part you want to do long-term investment, you can buy like step by step, you know, whenever you had a pullback, you just buy the dips, okay? Because I mean, in the next 1 to 2 years, it's gonna be still a lot of things happening from the from the regulatory side, from the geopolitical side. So there will be a lot of pullbacks, but in the mid to long run, it's definitely an upward trending, okay? And if you're smart enough, just like do some like short-term trading to take your profit as a day trader, if you can do that, okay? So what I was trying to do, I was trying to let you take a look at another investor's opinion from Wall Street. So yeah, let's do that.
What are you anticipating from Didi?
Yeah, I'm expecting a very good IPO reception, IPO debut. I mean, you're seeing the largest ride-sharing company in the largest market in the world, in the second biggest economy of the world. So I think this is a lot of big stuff going on here. So I think this is going to be a big day. But more than that, this is a company that's really executing very well. Tremendous tailwind behind it. There's rapid urbanization going on, the secular wind, the rising middle class, and the restrictions on driving, the density and all that stuff. So I think all that tailwind helps the company, and they're executing very well, and tremendous growth opportunity ahead.
Obviously, American investors are going to look at Uber and say, okay, how is this different than just Uber? This is a ride-hailing company like an Uber. They want to do more things. Their plan is to do more things, Santosh, but do we value them like an Uber? How are they different? How are they the same?
Yeah, I think it's more than Uber. It's very well funded. Plus, it is a global play, and they're growing beyond that. Right now, 90% of their business is really coming from China. Only 2% is outside. So I think they have a lot of tremendous demand out there. So I think Uber is also great, but this is four times bigger in terms of volume of business and everything. They're vertically integrated. They're in much more businesses. There's optionality to go into other areas as well. So I think this is Uber plus more. I think that's how you can see it. And plus, they have very little competition, not because they're doing anything unfair. It's just that they outbid the others. They survived. They spent a lot of money, established themselves. And in the outer areas, beyond tier two and tier one and tier two, where they dominate, there's tremendous competition out there. So I think they need to grow there. So there's no monopoly issue there. So I think in that sense, I don't think the regulatory risk is that much.
Okay, because Uber has hardly burned up the charts. I mean, it's going back to its IPO, Santosh. Of course, we had this thing you might have heard about called the global pandemic and lockdowns. But overall, Uber has not made investors a lot of money. In fact, I'm not sure there's been any company in the world that has burned through more cash. I mean, losing billions a quarter than Uber. Now, investors haven't cared as much. Does Didi have a better path to profitability? Does it have a path to profitability?
Yes, they have a path to profitability. I think by 2023 at the earliest, or late 2022, they should be EBITDA positive based on my projections and numbers, and based on many numbers. So they definitely have a path to profitability. They're executing very well. And I think it's much different from Uber. They're just bigger in many respects. But don't expect the stock to just run out. There are issues, just like Uber is. Ride-hailing business is still in its infancy. The penetration is still low. The adoption is still low despite the popularity. So they still have a long way to go. They still need to spend a lot to change minds. And it's going to take some time. So you're going to see some volatility in the stock. It's going to pull back. There's some regulatory headwinds out there. So I think there are a lot of issues out there. But in the end, it's a long-term play. Near term, you're going to see a lot of volatility. But in the long term, you need to have it in your portfolio. It's a big cap play, just like the other big cap plays in China. It's a great way to participate in the second largest economy of the world.
All right, so as you can see, that's the thing I was gonna mention. So besides the comments from like Jim Cramer and my personal and like some of the investors from like Wall Street and all the like comments on like media side and the the news report, I also want to show you guys a video about like why China is beating the US in electric vehicle. Okay, so why this is important? Let's take a look. In the but we not gonna see the whole video because you can just like take a easy look real quick. This video is a bit too long to play in live stream. Please check into the description box below to have better understanding about how China is beating the US in electric vehicle, which is also mentioned by Elon Musk over and over again. Okay, so why Tesla had the big move to China? Obviously because Chinese market is too huge to ignore, while the US government is just too fucking clumsy and stupid to provide all the tech giants with good enough platform and market environment to perform, to innovate, and to contribute for all the human being. That's the thing. This is also how Didi will just have a steady ride to fly in the future, along with China electric vehicle market development. Didi's future is promising while China is the top one electric vehicle market, naturally improving Didi's business environment in the future. Besides, Didi is struggling to have business extension into auto vehicle and electronic vehicle charging development and manufacturing in the biggest market of China. Some biased and discriminate critics keep like thinking that, whoa, China communist is horrible and stupid. Sooner or later will crack down on all the tech giant with antitrust law, like what just happened to Alibaba's Jack Ma. an Ant Group IPO, Ant Group's IPO overhaul in last year. I'm not sure if this is just like fun or funny, but I would think that it's probably just like seeing things from narrow and poor angle only. I was working with many institutions in Hong Kong for an IPO last year. All the investment banks and brokers definitely, like, surely want it happen so they can make money through all of those transactions. But Chinese government just expressed the reasons and a necessity clearly that they have to make sure and keep the financial system and economy stable enough in the best favor of the general public instead of a small group of those greedy, shady, evil, super wealthy and powerful investors and politicians. Okay, so that's the thing, right? That's the information we have from some of the corner in the world. So like a lot of time we can not only look at one things from only one angle. Okay? So as long as we try to be sensible and rational, we should know that China government is probably never gonna crack down any tech giant for fun or for some personal reasons, right? And think about that. Do you think like President Xi is greedy or horny compared to Trump or Biden? Answer is obviously is very clear and obvious, man. Come on, think about that. This is not to be biased. I know that a lot of you might see China as enemy, as poor, stupid shit. But come on. It's better to understand the so-called enemy. Better to understand the so-called enemy in a more sensible and rational way, while they have been growing too fast and too high to even have time to look down on us. Come on, that's a thing. That's a warning signs, guys, for us to clean ourselves internally and mentality and make some good changes inside ourselves, especially during a time of disasters, okay? So I'm very concerned and worried about you and me and her and him and them to see if we can actually wake up, please, man. And they're just like always they're just like always like at least like two sides or even multiple sides to look at for everything, every person, every country, everything. It'll be wiser and more sensible to consider from all of them, okay, please? So, I mean, like, after all, money is never biased in Germany. Money is never biased. You want to make some money, if you want to make some profit, stop being biased. Stop being biased. It's hard. And so, like it's mentioned again, it's mentioned already. It's mentioned here again. So besides all that, like Didi is adding in many major global indices. Once again, proving its weight, value on an unavoidable trend to the global economy and financial world. That's Didi, D-I-D-I, okay? So when you have time, please check into that, okay? So I hope you have enjoyed the live stream today, and hopefully this is helpful for your trading investment. And how you think about Didi and the related topic and stock, please leave any of your thoughts and comment, and let's keep a close eye on what's been going on afterward, and we will do more we will have more insights into the IPO markets, into the China IPO, like a US IPO, like Hong Kong IPO, and all that. So please feel free to let me know for any of your thoughts and comments. And thanks God again, it's Friday, and have a nice weekend ahead. So I will see you in the next one. Peace.